Yo, what's up, guys? It's Trader X coming to you from Soweto one more time. All right, so I'm back at it again. So, as you all know, well, some of you, um, we're going to be discussing supply and demand. I'm actually going to be going deeper because I realized that in my previous recording, I only touched on a few aspects, right? I only touched on a few aspects. Bloody blah. I only touched on a few points. So with this here video, is I'm just basically going to be filling in all those blank spots, right? All right. So before we go ahead, guys, I'd just like to extend my gratitude to every single one of you guys who subscribe to my channel. I really, really appreciate it. It means a lot to me. I've reached 1,000 subscribers, and I'm delighted. I never thought when I started this, I never thought that I'd actually get to 1,000 subscribers, and now here I am sitting here with 1,000. The last time I checked, it was 1,010 subscribers, if I'm not mistaken. Yeah, 1,010 subscribers. So thank you to each and every one of you. So if this is your first time seeing or being with us now, joining us, please remember to hit the subscribe button together with the notification bell, so you can be notified whenever I upload a video, right? So let's not waste any time, guys, because this one is going to be a little bit long. So let's jump into it real quick. So in the previous video, I had explained to you guys how to identify supply and demand, right? But what I didn't mention there is, I didn't mention that that is the one type of supply and demand that you can actually trade, right? There's actually two types of supply and demand that we can trade, and that will be the breakouts, which I showed you in the previous video. I'll touch on that in a minute. And another one is identifying key market reversals, right, using supply and demand, and I'll show you that. But I also need to point out that both of them need to coexist, right? You can't, well, you can trade one without the other, but I would strongly suggest that you try to identify the key market reversals first before you can go ahead and trade breakouts. Now, when I say breakouts, I do not mean normal breakouts as everybody knows it, right? The conventional way of breakouts, which I'll explain now in a minute. So you might be wondering, why all of a sudden Trader X has changed, has kind of not really changed, but kind of abandoned most of my speaking about myself in the third person. Anyway, why I've abandoned most of my trading systems. The reason for that is because I had back tested. Well, I'm a Wyckoff trader. Everybody knows that, right? I'm a Wyckoff trader. I love Wyckoff. It's worked perfectly for me. But the reason for me to abandon most of my systems is because I tested supply and demand, and it was astonishing what I actually found, right? When you know me, guys, when I find something that I'm interested in, I'll fixate on whatever it is until I understand it, if I don't understand it at all at a particular time, right? So I didn't understand supply and demand, but there's one thing that actually got me into supply and demand, and funny enough, that will be Mr. Wyckoff himself. He's got these three laws, and his second law is actually the law of supply and demand, right? And that's all I needed in order for me to be able to research supply and demand as well as understand it fully, right? And I'm sure we all know what the law actually says. The law basically says when market supply is greater than demand, prices will go down, right? So when supply is greater than demand, prices will go down, right? And when demand is greater than supply, prices will go up. You understand that? So he's basically saying to me that in an uptrend, demand is king. Basically, demand rules the uptrend, right? And in a downtrend, supply rules, the downtrend. So I want you to bear that in mind. I want you to keep that in mind whenever you trade supply and demand, which you are most likely going to be trading it from here on in moving forward, because it's that simple. Not really simple, but it's that good of a system that you wouldn't need anything else to trade moving forward. And I'll jump into those. Bear with me here, guys. So Mr. Wyckoff is really the one that got me intrigued with supply and demand, and here I am teaching it to you guys because I realized how potent, for lack of a better word, supply and demand is, right? So let's jump into it, guys. Let's jump into the first. Oh well, with that being said, let's jump into the first way of trading, supply and demand, right? Which is, like I mentioned earlier, is what I literally taught you the last, or what I showed you in the last video that I uploaded. But like I said, there was just a few, well, quite a lot of information that was missing there, right? So now let's jump into breakouts real quick. Let me not waste any more time because I feel like this is going to be one long recording, but let's get into it real quick. So breakouts, when I talk about breakouts in relation to supply and demand, I do not mean, normally with breakouts, the conventional way is, when you see price go up, right, it tends to find, a consolidation area. This is the conventional way that, breakout traders actually trade. What they do is they wait here at the edge of the consolidation, be it, they don't know which end they're in, be it bullish or be it bearish, right? So they wait to see what happens to price here. So if demand comes popping out, they'll be here to buy right there, right? And if supply comes popping out, they'll be right here to sell right there, right? But that's not the case with supply and demand. With supply and demand, same concept as the last time, right? We want to see this essentially. We want to see demand going into a zone, right? And from demand going into a zone, it doesn't matter what we see come out of the other end, right? But to make this example quick and easy for you to understand is literally the same as what I did the last time. Supply comes out, it finds a level right there. Now remember, here is where the breakout traders hang out. We don't care about that, right? We want to see this guy because this guy gives us information. It tells us basically that, here supply outweighs demand here, right? That's the reason why this guy couldn't penetrate and continue to go up. Get it? So that's why this guy came out here. Supply came out. Fantastic. So we want to see supply come out of that box, right? And once supply finds another zone here, what we want to see is we want to see demand come out there. So if demand comes out there, that is perfect. That's what we want to see. But also, we're not trading here because we want to see it. Now remember, breakout traders are here because they want to buy, right? We don't care about that. Understand it. We don't care about that. We want to see this guy and we want to see this guy because they give us information. This guy here gives us information about this level here. So this guy basically says to us, there is no supply down here. So therefore demand pops out, right? Now, when we see that happen, we want to be here for when price returns because this is where we supply and demand traders are going to be selling, right? With a target round about here, right? And once price touches or goes into that level, comes back down again, we want to get out right there. Simultaneously, we want to buy, right? With our target being up here. So that is what I mean by breakout, right? Now, let me go into the charts and let me show you what I actually mean. Right, let me go into the charts. I'm using my daily charts here. So let's see. This is Euro USD. So let me just take a look here real quick. Oh yes. I almost forgot. So before we proceed, guys, right? So here's what you want to see with supply and demand. And I think a lot of people do not understand this concept. But what we want to see with supply and demand, right? It's very important. Before we go ahead, rather take out a pen and a piece of paper, and write this down real quick. So when you're trading breakouts, the most important thing that you want to see is you want to see the trend, right? So you want to see where the trend is going. This is key. So you want to see if we are in supply or if we are in demand. I'm using my touchpad again, guys, so bear with me. So you want to see that. We want to see the trend, or rather, we want to see whether we're in supply or whether we're in demand, right? Fantastic. Another thing that we want to see is, in the case of supply or in the case of a downtrend, we want to see rally, and then we want to see a base, and we want to see a drop. Understand that, guys. We want to see a rally, we want to see a base, and then we want to see a drop, right? Because this here, that base, is where we are going to be, or this is where our breakouts are going to be happening, right? And this is, I'll show you in a minute. And in the event of an uptrend, which is demand, right, we want to see a drop, and then we want to see a base, then we want to see a rally. Understand that, guys. You need to understand that. So you need to write this down, right? So in the event of demand, we want to see that. We want to see a drop, we want to see a base, and then we want to see a rally, right? And in the event of supply, we want to see a rally, right? We want to see a base, and then we want to see a drop, right? And we want to see a base. I'll show you why it's significant, why you need to identify these two things. So remember, trend is king. Remember Mr. Wyckoff. Always bear that in mind, right? We need to know what the current trend is, right? Fantastic. So now let's jump into the charts here real quick. So what I normally do here is to identify the trend is I want to see where we were previously. So this is the highest high that we've reached, right? So this is the daily chart, right? So if I take a look back, all right, yeah, we are in a downtrend, right? And this is the lowest low before this highest high actually came up, right? Fantastic. So in this area here, we were in an uptrend, and now in this area here, we're in a downtrend. So it's safe to say that we are in a downtrend, right? Now, how do you trade breakouts? All right, so let's zoom in. Let's explode this chart and let's take a look. So now we've identified that this is, the highest high that we've reached, right? And now we're in a downtrend. We are in supply. We're in supply, right? Ooh, that's small. Anyway, and I strongly suggest, guys, that if you're forgetful like myself, it's okay to put notes on your charts. A lot of people don't do this. It's okay to put keywords, notes on your chart, whatever, to remind you of what you're actually doing, right? Fantastic. So remember, guys, this is a rules-based system, right? So here we go. Now I want to take a okay, I've just recognized, I've just seen one rally based drop. So I'm going to take a screenshot real quick of this. Let's get you all off. Bear with me, guys, bear with me. So I'm going to take a screenshot real quick. Great. Now, rally based drop. All right, we in supply, so we want to see rally, base, and then drop, right? At the base, that is where we're going to find our zones. You need to understand that, and you need to write that down. At the base, that is where we're going to find our zone, right? And then, like I said to you guys, let's redo it again. We want to see a rally, then we want to see our zone here, which is the base, right? That's our zone right there. That will be the base. And then we want to see a drop, right? So once we see the drop, we already know that there is no demand here. The rally basically is demand going in there, and then we've got supply coming out, right? Now what we want to do ideally is we want to see price coming back into the zone to collide with it. Now when it does this, we're going to be hanging around at this edge here, right? Fantastic. Now how do you identify those? like I said, we're in supply right now, right? So prices are going down, right? Fantastic. Daily chart, remember that. So we look at the charts and we can see right here we've got a rally. Prices stall here, tries to go up, stalls still, stalls, and then we've got our drop. So we've got a rally and then we've got a drop. The only thing that's missing is our base. Our base is right here, right there. That's our base right there. Let's whip out, sorry about that, let's whip out our ruler here real quick. So there's our level, proximal and distal line. If you don't know what I'm talking about, go rewatch the first video that I made and you'll understand what the proximal and distal lines are. Right, so we've got our rally, we've got our base, we've got our drop. What's the only thing that's missing now? Now what we know here is, remember, suppose we don't see anything on this end here, right? When we get to this level here, what we want to see is we want to see price come back into this level right there. You get me? We want to see price come back into that level right there. So now we know that here there is there's little demand here, and because we're in supply, we're expecting prices to go down. Got it? Great. Now prices come down here and they stall again. You see that prices stalls here, tries to go down, it fails, it rallies, comes back down without going into the zone, right? Comes back down and then it rallies into the zone to collide with it. Now this is where we hang around here. We want price to come back to us, right? We don't chase the market, we want price to come back to us. Once price comes back to us, how do you enter the trade? How do you take the trade? Well, put a buy limit right there. I mean a sell limit at the proximal line, right? And at the distal line right there, you're going to put your stop loss right above that. I normally trade the 4-hour chart, so I would give it about 10 to 20 pips, right? Normally 10. I'd give it about 10 pips above the distal line. Understand that? Above the distal line. So this is what we want to see, above the distal line, and we are good, right? And remember, again, very important, what you want to do is, now that you've entered, right, what you want to do is you want to take a risk to reward ratio of 1 to 3. This is what I recommend, right? And this is what I normally take. So you can change your risk to reward ratio. That is absolutely fine, right? It's completely up to you. If your orders don't get filled at your 1 to 26, then it's going to be your problem, right? So you want to have the odds tilted in your favor. You need to be smart about this, right? Risk 2% and gain 6% when you're right. So I mean, it's a win-win situation at the end of the day, right? So it's up to you. I normally want to take 1 to 3, right? So 1 to 3, once after it gets out here, I wanted to take 1 to 3. So I know it's going to get out round about here, if I'm not mistaken, and there's my profit. I'm out with a profit, right? Fantastic. Now we're on to the next signal, or we're on to the next zone, right? And now it just so happens that this proximal and distal line actually hold. Yeah, it holds. We can all see that, right? It all holds up until there. So you could sell again. Another thing that I normally do not recommend is, in this case it worked out. The second test, which is this part here, I would normally not take that. But this one is too good to pass up on. I mean, we've got our base right in that zone. So yeah, I would have actually sold here. Because, you know, if you look at the odds, I mean, we're in supply and we're in, this supply zone as well here, relatively nice supply zone. And here we have, you know, rally base rally in that supply zone. So I would have taken that. I would have actually taken that, but I do not want to see, you know, this happen. I always, and I recommend you do this as well, I recommend that you take the first test down. You do not take the second one, right? Because sometimes the second one does not even actually get up there. Sometimes what would actually, it doesn't actually rally, not really rally, it doesn't drop. Sometimes what would happen is it will go in, come back down, and then continue to go up. You know what I mean? That would be the second one. When it gets to the second one, it basically means that, you know, the supply in there is now starting to dwindle. Because remember, every time the price tests a level, the supply that is left over from here gets filled, and that's what pushes prices down, right? When it comes back up again, when it comes back up again, all of these, all of the supply here would have been slowly being depleted, essentially, if you understand what I'm trying to say. So let me just explain that real quick, and it will also be applicable to, you know, the market reversals, essentially, but I'll get to that as well once we're done. So here's what happens. Market makers, they're the ones that are responsible for creating supply and demand zones, essentially, because what they do is, when they get to a level, when they see, you know, buyers coming into the market like that, they typically hang out at a particular level and they pump their money in there. Now remember, they have big dollars, they have big money, so big that, you know, all of these orders that are coming in get absorbed here and then some, you know what I mean? So therefore, the market makers, positions rather, forces prices down, right? When they force prices down, this basically means that, you know, and you also need to take a look at how the you know, how price leaves the level. You also have to take a look at how price leaves the level. In this case, see how big this candle is? That to me just basically says most of their orders are not filled. It left too quick for all of their orders to be filled at this level here. Do you understand what I mean? So yeah, most of their orders are still left over. So now they're in a campaign. Once they get here, they go into a campaign to mark prices up, right? And they also buy simultaneously. You need to understand that they buy to force prices up to come back up here. They simultaneously let go of their buy orders, which automatically get converted into sell orders, more sell orders, right? And some of their orders are filled here, leaving a little bit, or maybe a little more left for this area to even work out as well. You know what I mean? Normally they wouldn't do that. Normally there wouldn't be a second test. Normally it will be, you know, this is the first zone that we want to see happen, and then the rest of the orders would come in here, and therefore prices would actually go down, and there wouldn't be a second test. If there is a second test, you already know it's weak, so they're most probably going to do this and then go all the way up, right? So you need to be careful with that. All right, so that is how you trade breakouts, essentially. Oh, I forgot to mention one other thing. Now with breakouts, guys, let me just explain something. With breakouts, here's what happens. Remember, I told you guys previously that price moves from supply, actually, yeah, it moves from supply to demand, from demand to supply, and so it will actually go, right? That's basically the order of things. That's how things happen. Now, when you're in supply or price or downtrend, you don't want to be buying, right? The reason for that is because you're not sure how far that supply or that demand is actually going to go, because now remember, supply rules everything in this case. So you're not quite too sure sorry guys, as I clear my throat. So you're not quite too sure how far, you know, the buy would actually go. Normally it wouldn't even go for 1, 2, 3. Your best odds are if you sell, right? So for instance, I make a quick example. So we see price came out here hard, right? And then we see it stalled right there, and it stalled right there as well until it broke this level. Now, where is that level? That level is right here. That level is right here. That's the proximal, and then we've got our distal. Right, now remember, we want to see this happen. So we went in. Let's get rid of the ruler. So, and that little line. So we went in, we want to see that, right? So now we know here there's supply. Supply came out, found demand, right? It found demand. Now we are actually hanging out. Hang on, I'm confusing myself here. Oh yeah, we are actually essentially hanging out here, right? So we went in. No, we're not hanging out right there. So here's what here's what confused me there a bit. Hang on, let me draw these correctly. So there's a proximal and there's a distal, right there. There you are. So demand comes in, supply comes down, right? Comes out. And then demand kicks out. Now when demand kicks out, we already know that up here there's a lot of supply, right? So chances are when demand comes in here, it's going to get rejected, right? Now remember, we're hanging out here because of the supply that came out here. So we already know that up here there's a lot of supply, right? So when demand comes out, yes, it didn't make it quite up to that level. It came down here. But suppose that we were here. When demand came out, we would have been hanging around here to sell, right? Can you see that when you sell and you hold your position, your 1 to 3 can get filled here, right? As opposed to, now remember, we then saw this level here. We wait for price to come down. Once it comes down, say to this level, right? We want to now buy here. Remember, we're in supply. We want to buy. Can you see the problem? We're going to buy at this level here with a stop loss right there. This would have to be your target. And that to me looks a hell of a lot smaller than this. And this is the reason why you don't want to buy, because there's a lot of uncertainty when you actually buy, right? You could find that, for instance, look here. Even here, sometimes the trades don't even work out. So this is a nice level, but look here. Look what happened. Look what happened. And you could also get confused. Now, if you take a look at this level here, or this candle here, somebody would have bought here. See that? Somebody would have bought there, because that's a test of this level here. Somebody would have bought here thinking, alrighty, price is about to go up. Nah, it stops right down here, right up there, and it continues on this trajectory. So you want to be smart, and you don't want to be selling in supply. I mean, you don't want to be buying in supply, right? All right, so that covers breakouts, right? Now I'm going to talk about the bee's knees. So I hope everybody understood. Everybody understood trading breakouts, right? So it's not the normal breakout kind of setup that, you know, normal conventional kind of trading books and mentors and all of them actually tell you. Now we're going to jump into the bee's knees now. Now this one is essentially playing with the big boys, right? This is the market reversals. Now identifying market reversals is paramount. You need to be able to identify market reversals in order for you to be successful in trading supply and demand, right? And I'll show you what I mean now in a minute. Now I need to also, all right guys, sorry about that, we were interrupted by my trusted laptop there. So as I was saying, guys, with supply and demand, you are actually able to call, not really call, but you are able to identify key market reversals, right? And this really, market reversals is where you get the big cheddar. Essentially, this is where you get the big, I wouldn't say bucks, but the big pips. Yeah, I mean, look, your risk is going to be small. This is where your risk is small and your potential return could be huge, could be exponential. And I'll show you when we jump into the charts what I actually mean. You could get away with anything between 1 to 10, or even way more than that, 1 to, I'd say even 20, sometimes you actually get up to that. But it depends on the movement of the, it's actually quite too small, 1 to 20, I think. But we'll see. I'll show you what I actually mean. But you know, calling key market or finding key market reversals is where you're going to make your the bulk of your money. So you need to understand that, and you also need to understand that breakouts um, and market reversals need to coexist, right? Because if you can't identify a market reversal, if you can't identify a market reversal, let me just go into Euro USD one more time here. So if you can't identify a market reversal such as this level here that we have, right? So if I zoom out, we had already established that this level here is a key turning point, right? Is a turning point right there. So if you're unable to call, or if you're unable, not really call, man, why do I keep saying call? But anyway, if you're unable to identify this top here, right, in the box, chances are the only time that you're going to be trading is going to be, you know, when you trade in breakouts like I showed you. And remember, this was the first breakout that I had identified here. So you would have been missing out on all of this here. You would have been missing out on all of this goodness all the way here. You know what I mean? And that would have been a low risk, high reward trade. Because if you were to hold that trade until the next supply zone, I mean the next demand zone, look, you would have still been holding that trade from up there all the way to down here. And that's what 1,564 points, or 1,564 pips. You know what I mean? So you need to identify that. Once you identify that, right at the top, you could have your initial trade, and as it progresses down towards the demand zone, you can go ahead and trade your breakouts. And that is how people actually make money, trading supply and demand. Sorry about that, but a lot of people just don't understand it, right? All right, so let's jump into the market reversals. So market reversals, guys, market reversals, let me just explain it real quick to you. Market reversals happens like this. You have the market maker sitting right at the top with his big fat belly. Now he knows that he needs to sell, you know, X amount of his position at this level here. So in the meantime, he sees price actually coming up like this, right? Until price gets up to his level, that's the only time that he's going to jump in. Now there is a way for you to see when the market maker actually jumps into the market. And how you see that is we will start to see big bearish candles, or rather let's just say big supply candles popping into the market, right? They could be in quick succession, or it could be one red one, one big red one, and a small little green one, and then a big one, and then a little bit of a pause, and then continuation. It could be like that, right? All you would need to identify is when it moves down like that, which part is, or rather how big the candles are. You need to understand that, you need to see that. Actually, you need to be able to identify that. You need to be able to identify how big those candles are. If they're not big, right, you need to just identify, you know, how many of them there are versus, you know, the bullish candles, for like, not really lack of a better word, but yeah, you need to identify how many of the supply candles there are in that particular move versus the demand candles, right? So if it outweighs, or if the supply candles outweigh the demand candles, then you know that the market makers are actively involved in that. Now let me just show you an example here of what I mean. I know USD Swiss franc has some, so we can clearly see right here that the market makers were involved in marking prices down here, right? Take a look at how big, you know, actually not how, yeah, but how big these candles are once they left this zone here. See how big they are? And then we get these one little demand candles popping in every now and then. There's one there, and there's another one there, But surrounding these two candles, we've got big red candles to the downside, right? So that's how you identify. You need to be able to understand this, guys. When you see this, you know that your trade is going to be a high probability trade, right? It's going to be a high probability trade for a reversal, and you need to understand that, guys. You don't look for anything else. You need to understand this, guys. Now, you could be asking, but what's going on here? All right, so here, the thing is, and I just don't want to do this right now because I'm moving away from the overall point here. But here, the thing is, you can actually see, but let's just discuss it here quick. You can actually see that demand has kicked in. Take a look and see how big this candle is compared to all the other candles to the left. It is the biggest. So therefore, it basically says to me, now when you see it, it should also say to you that demand is in the markets. But however, though, this level here, the supply level will hold a little bit more weight as well, right? Because you see from this big blue candle here, down here, the demand candle, prices rose, right? Control F. And remember, I had said to you guys that prices normally move from supply to demand from supply to demand and vice versa all the way. That's all price does essentially. Supply and demand, supply and demand, supply and demand. That's all that it does. So had you had this trade here, the demand trade, you would have been sitting pretty on 175 points right now until you get up to this level. So this is the 4-hour chart, right? Until you get up to this demand level here, the supply level here. You know what I mean? Fantastic. So now let's go back to that. So once after the market makers have made their intentions clear here, like I said, guys, you don't need indicators, you don't need volumes to show you this. Once after they've made their intentions clear here, what would normally happen is this, right? Until they intervene again here at the bottom, which I showed you here, this is where they intervened, right? I think I should take a screenshot here so I can explain this a little bit better to you guys. Let's take a screenshot. Let's take a screenshot real quick. I think it would be way more easier. So it will be way more easier. Should have done this from the get-go. But anyway, bear with me. So let's just make this black. Okay. So what is going on? No, I don't like this. Sorry guys, let's just trying to figure out a few things here. But let's try snipping one more time. See if we can't get this right. Oh no, why is it cutting all of my stuff? Oh, this sucks. Pardon me, guys. Pardon. I want to try one more time. I'm going to try one more time. What's this? Let's try one more snip. Ah, there you go. Figured it out. Sorry about that, guys. I was pathetic. Anyway, so here, so here's what we're looking at right now. Right now, remember I'd mentioned to you that the big guys are sitting all the way up here, right? They figured, all right, so this is where we want to sell, right? So now they pumped all their money into the market, but now their orders are so big, right, that they drive prices down quick and rapidly, right? And this is how we identify that the market makers are actually in the market, right? And that is exactly how we identify that they're in the market, because it happens all the time. It happens all the time. So that's what happened there, right? So now we see that the market makers are here. So how do you now take note of that? That is actually simple. As you can see, we've got here our rally, and then we've got our base, and we've got a decline there, or a drop, right? So we've got our distal. What am I doing? We've got our distal. Now we're gonna draw a proximal right there. All right. So that's our proximal right there, and that's our distal right there. Right? Great. Now, so when prices start to get marked down like this, right? The market makers know that it's in their best interest to move prices all the way up to the supply zone. The reason for that is because when prices leave levels this quick, their orders don't all get filled here, right? And if they did get filled all the way up there, this would be an inefficient market, essentially. Is it inefficient or efficient? I'm not too sure. But anyway, it would be an inefficient market, or would it be an efficient market? I don't care. But yeah, we would actually see the intention. So this would literally be one big candle like that. You know what I mean? And nobody would have an opportunity to actually enter here. You know what I mean? Normal simpletons such as myself and you, we would not have any opportunities to enter, because this would be one big candle. Where would you enter? You know, so that it has to happen like this. They have to provide liquidity to retail traders as well as anyone else that's participating in the markets, right? As well as anyone else that is participating in the markets. Otherwise, you know, we'll all lose interest, no longer trade, because it will be just one-sided essentially. Great stuff. So that's what happens there, and then it comes down. Markets get marked down, right? They hover a little bit here, and then guess what happens? Right at the bottom, the market makers intervene again. Remember, it's in the best interest for them to move prices all the way up, right? So they intervene again, and that is made evident by this big candle here, that this is demand, nothing but demand, right? So now we've got our distal right at the bottom, and our proximal is right there. So you see what's happening? Price keeps bouncing between two levels. We've got a supply right there, and we've got a demand right there. You get it? Supply and a demand right up there. So now once price gets up here, they mark prices down in an effort to get prices to go up all the way here, because that's their main focus, right? The main focus is that we want to drive prices in the opposite direction, right? So prices go all the way up. Well, in this case, price is still here, but it's going to come up here, and this is a level that I'm watching currently, right? I'm watching USD Swiss franc here. I'm looking for a sell right here, right? So that is exactly what happens here. Now, why I'm extra confident that this will not exceed this level here is because we are in a downtrend here, if I'm not mistaken. Last time I checked, we are in a downtrend, so we can see that we are in a downtrend, right? We can see that we're in a downtrend right here, right? So when price gets to that supply zone, it's only natural that price does this. It's not really only natural, but the odds are actually on my side, because we are still in supply. You know what I mean? So this demand here is actually short-lived, and it's going to diminish right up there, and I'll take myself to the downside, right? Now, when they do this, right? When they or rather when prices go up to, find this level here, right? Typically what would happen is prices would come all the way down and would exceed that level. So it could keep going for quite a long time once after it comes out from here, right? And then it will follow the normal trend essentially, and that's where I'm going to also be trading breakouts as well, right? All right, so this one here is really quite a small one, but I want to show you another one here real quickly, let's go back to euro, right, to just make things a little bit better for all of us. Now, like I said, when I start off, I take a look and see where we at, right? So this level here. Now let me show you that, I don't think I said this to you guys, but wherever price finds, wherever price kind of stalls, not really stalls, but whenever price reaches a high, or the market reaches a high, you always need to understand this, guys. Whenever price reaches a high, an untested high, or a high where when you look to the left, there's literally nothing there. See how big the space is? Literally nothing there for days on ends or even months. Best believe that there is a reason for price to reverse at that particular level, right? So normally what I would do is, say price was here, right, and we didn't see anything else past that, past here, right? So let's just say price is at my purple zone, purple line right there. What I'd normally do is I'd scroll back as far as I possibly can, right? As far as I possibly can to find where that line makes contact with price. Do you understand what I'm trying to say, guys? So this line, remember, it must not collide with anything else. No, it must not collide with price, right? And especially when it's immediately to the left of that zone itself, or that high itself. So say price was here, and I'm looking at price is just printing at that purple line right there. What I want to look at is, because I see that price hasn't been here in quite a long time, I want to see if there is going to be a possible reversal in the horizon, right? And the only way to do that is you scroll back, and when that purple line comes into contact with price, this is where you are going to find levels, interesting level, not really interesting levels, but levels, potential levels of reversals, right? So in this case, let me get this off. So in this case, my line or price collides with this level here. Where's my mouse? Okay, my mouse is on. Let's go back. There we go. So as we can see, price collides with this here. I'm sure we can all see that that is a pretty significant zone. I'm sure we can all see that, right? That's a pretty significant zone. The reason it's significant is we can clearly see here that the market makers have jumped into the markets right there, right? Shall I take a snip? Hopefully it doesn't mess me up. Let's do that. Let's take a screenshot. Let's take a screenshot. I'll need everything out. There you are. All right, so as we can see, guys, so my price line, which is this purple one, I can see in the past, this was what, back in 2014. Back in 2014, price came into contact with a previous supply level, right? Why is it a supply level, and why is it significant? Because as you see here, we can clearly tell that the market makers are involved in this move. So look here, 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16. You get the picture, right? And then there's 1, there's 2, there's 3, there's 4, 5, 6, 7. There's 7 blue candles in this whole move here. 7 blue candles, or 7 demand candles in this level here. Okay, so that doesn't want to go away. Was my computer stuck? No, it's not. Oh, there you are. Right? So this makes this level here significant, because also this is the origin of, you know, the move down, right? So you always want to find it. You always want to find the origin of the move down or the move up, right? So this is in the case of supply, right? So now let's go back to our chart. So what I would do here is I would mark out my proximal, and I'll mark out my distal line, right? Doesn't have to be 100%, right? So I now know that there is a potential of price reversing, because you see prices at the bottom of the zone. Once price retraces to the zone, there's a high probability that the market will actually continue to go down. Why do I say that? Is because the market makers orders have most likely not all been filled when they jumped in here, right? Fantastic. So as price continues to go on, look what happens here. Price respects that zone, and then price gets marked down until today. Price has been declining, right? All right, so let's find another example real quickly. So I now see this level here right at the bottom there. So what do we want to do now? What we want to do is, say price was here, right? And I didn't see anything else past, you know, that red candle, right? So that's where price is. What I want to do is I want to scroll back, because I can see the price hasn't been, you know, at this particular level in quite a long time. So when I scroll back, can you all see what's going on here? Can you see the pattern? Right there is where price comes into contact with my level, or where my level, or rather a previous level of demand, essentially, right? So now I'm gonna mark, there's my distal, my proximal, and here's my distal, right? So I now want to go back there and just see what's going on. So you see this level here is a little higher. So you see this level here is a little higher than where I want to be. So I want to be down here. Right? That's what I want to understand and find out. But to make it easy, seeing that, you know, we already have these candles already printed, so I'm just going to put my line right there. Let's change the color to just make it a little bit clear. Let's change the color. You know, green. Click on OK. There we go. So we're just looking for the green line and where it originates, right? So we can already see that it's way below this level here that I marked out. So take a look at that. Price hasn't been there in quite a long time, which is a good sign, right? It's a very, very good sign. So where is, I hate this laptop. Anyway, so let's take a look and see what had happened there. Where's our green line? Whoa, that long. Is that it? No, colorblind. There we go. And there's our green line. Can you all see that? Now if I remove these purple lines here, so we can see now we can clearly see why price decided to turn right there, because we have another zone here. And guess what? Even though it's that far back, right? This one is back in 2002. So even though it's that far back, take a look at how price was accelerating right there to the upside. Can you see that? So this basically says that the market makers were involved here. And here we've got some orders that are still outstanding. Yes, it may not make sense to you right now. Like, I mean, since 2002, your job is not to question that. Your job is not to make sense of why market makers do this. Your job is to trade with the market makers. You know what I mean? So you go back, you find that level, either a supply level or a demand level, that is either surrounded by, you know, the big movement like we see here, where the market makers are intervening or are jumping in, right? Or you may find it right at the top of, you know, possibly a reversal or at a particular level. So say for instance, this was a level for the market makers. You'd get red candles, a lot of red candles going down like that. So that would automatically tell you that right here would be a perfect area for you to, you know, think about a sell, like we had identified here with the USD Swiss franc. You know what I mean? Like we had identified here, they reached the top right there, right? Price reached their level and prices got marked down rapidly. So you see the difference between the two setups. This one here happens mid-trend, right? It happens mid-trend, and this one here happens right at the top of the trend. You know what I mean? Right at the top of the trend, right? And it causes a reversal essentially. Right? So that's what happened with euro. Now we go back to our low, right? And where is our low? Let's see if we can find it. This is the reversal that we had identified. I'll show you now. And then we're done with the examples. I just want to touch on a few things here real quickly, and we should be done with this tutorial. So where's my green zone again? 2014. There you go. Okay, so you see the green zone, there you go, was tested here. Was tested once there. I would have taken that trade, and then it was tested again here. And this is, I think this is where it really took off. Yeah, this is where it really took off. See that? It was tested there, and then was tested again there at the circle, and it really took off. So now if you go back to 2000 and what was it, 2004, where it got tested, so you can literally see that the target would have actually been right up there, because that's where, that's where demand diminishes. And look here, didn't even get up there. So you see that? That would have been our target right there, but it didn't get there, right? The reason it didn't get there is because we were interrupted by this level here, which marked prices down. We were interrupted by this level here. All right, so now the few things that I wanted to mention here is as follows, guys. Now, you know, the market reversals, right? Finding market reversals, the key things that you need to identify is that that level should have not been tested, right? Should have not been tested since it was created, essentially, right? So what I'm actually saying here is as follows. I want you to take a look at this purple one here. Just remove everything else. That level should have not been tested at any point for you to know that it is actually a strong level as well, right? So to tilt the odds in your favor, that level should have not been tested any time other than that one time where you notice price going towards it. So this level here was never tested anywhere along the way from here until right there, which is why we were confident that prices, or we become confident that prices would actually decline from there, right? So anywhere, it must not be tested anywhere in order for it to be a valid level. I wonder if you understand me, but you need to be sure of that. You need to be sure of that, right? And what else did I want to add? I'm just trying to think if there's anything else that I actually needed to add. It is 4 o'clock in the morning right now, so it's time to hit the sack for me. But other than that, guys, well, I hope you enjoyed this one. And if there's anything that I missed, yeah, leave me a comment. Or if there's any questions, leave me a comment, and yeah, we'll touch on it. It's been good, guys. Thanks once again for watching, and adios.